Hey everyone, it's Mike from Orderflows, and I'm shooting this quick video to explain how to use Orderflow to find potential reversals in the market. I mean, to me, this is one of the main benefits of Orderflow is being able to read what is happening in the market as it happens. So you can determine if we're going to turn at a certain level in the market, or are we going to just keep going, or we're going to go sideways. I'm always looking for trading opportunities, and sometimes it's just really obvious, I think, in the order flow. I mean, lots of times market's very boring. The market's there, people are trading back and forth, but there are certain times in the market where things just really jump out at you, and you have to know what to look for in order to trade them. I mean, if you don't know what to look for, it's kind of pointless to use order flow. I mean, I come across people that they want to use order flow, but they don't want to take the time to learn it or learn what to look at. And it's kind of pointless because it's not something that you can just pick up by staring at the screen. Oftentimes you need someone to tell you what to look for. If you don't know what to look for, you're not going to become any good at it. So before I jump in, a brief disclaimer: this presentation is for educational and informational purposes only, should not be considered a solicitation to buy or sell a futures contract or make any other type of investment decision. Futures trading contains substantial risk and is not for every investor. An investor could potentially lose all or more than the initial investment. Risk capital is money that can be lost without jeopardizing one's financial security or lifestyle. Only risk capital should be used for trading. Only those with sufficient risk capital should consider trading. Past performance is not necessarily indicative of future results. Again, I always go through that because I want people to realize there is risk involved in trading. There's money on the line, and if your name is Mr. Flush with Cash, then you don't need to trade. You've already got money. But if you want to learn how to trade and hopefully make a few extra bucks here or there, supplement your income or make it your primary income, I know a lot of people that trade for a living. That's all they do, so it can be done. And that's why I like to do these presentations. It's just to give people a taste of what's involved in trading and the work involved. You're not going to see me, I don't own a Ferrari. The nicest car I had was a BMW before, but I don't fly around in private jets. I fly commercial, right? I mean, I see all these jokers on Instagram and Facebook posting pictures of Ferraris and all that stuff. There's very few real traders that actually live that lifestyle. For the ones that are good, they don't do it for necessarily the financial rewards, although I can't say that, but in the sense that they don't like the rewards that they get, but rather they get into trading because it's something that stimulates them, that gets them to it's a challenge for them. It's like a puzzle that they always want to be solving. So before I begin, again, the tools I use in this presentation is the Orderflows Trader software. Full disclosure, it's a software that I sell, but the reason why I came up with the Orderflows Trader software years ago is because I was trading with a different volume footprint chart, but didn't really have the information on there that I wanted. It was just the basic volume footprint chart, with the volumes that's on the bid and the offer, the delta, okay, but I want to take it a bit further because I'm a visual person. I like to look at a chart and see patterns and certain setups instantly, like that. The mind processes pictures at a much faster rate than crunching numbers or reading text. So this is the E-minis. This is a 1-minute chart. That's why I came up with the software, but I took a software and built on it to expand it into something that is going to make my trading much better. So this is a minute chart. This is 12:45 in the afternoon, Chicago time yesterday. We're just sort of hanging around here, going a little sideways. We dip down, and then we get this rally from 69.5, basically up to 74.5. Okay. Now, on this rally, this is just a nice, healthy 5-point rally. If you're watching the deltas, 300, 40, 380, 200, minus 58, minus 89, plus 1,000, minus 73, plus 191, plus 64, minus 22, plus 640. At the high here, 26.74 3/4. Okay, and on this move up, you see a lot of buying imbalances. You see 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. Basically almost every bar, every up bar has got buying imbalances in there. And obviously, you know, it's mostly positive deltas. You have a couple small negative deltas, minus 58, minus 73, minus 22. But just because you got a bar with negative delta doesn't mean the move is over. You know, those are smallish delta numbers. And, you know, that tells me one of two things. One, you know, the aggressive selling, you know, even though it's there, isn't that strong. And two, those delta numbers are kind of neutral. You know, I usually take numbers around 50 and below as kind of neutral in the markets. You know, it can go either way, especially in the S&Ps. You know, that could be one trade, a 50 lot, and, you know, you're looking at positive delta. So, but it was interesting because, you know, on this move up, again, from this swing low here, again, you know, in trading, you have to get to a point where you could identify potential swing lows or potential swing highs, because what's going to happen is you're going to rally from a swing low to a swing high, and that's where you're going to get short. You know, you're going to be able to identify, hey, you know what, there's a potential turning point in the market, and that's what I want to talk about here. So why is this so interesting here is what happens. Okay, you have this bar here, 3 imbalances, very strong positive delta, and then it comes in this bar, small negative delta, minus 73, and the market doesn't sell off. Well, why should it? Just because you have a red candle and negative delta? There's nothing in there telling me that, hey, you know what, this market is probably going to reverse here. Then we go a little bit higher. We get to the swing high here at 4 3/4, 74 3/4, and what happens? Okay, on the way up, you got positive delta plus 640. You got 82, 377, 523. You got 3 imbalances there, and you got a selling imbalance here, 273. Okay. Now, this is a minute-based chart, so keep in mind that a new bar is going to form when the minute closes. You know, I like to look at range-based charts, but I know a lot of traders still use minute-based charts. You know, I want to use it for this example. And so what's happened is the market opened up, traded up to 4 3/4. Some selling came in here, 273. The bar closed, period closed. It was 12:57 and 59 seconds. Okay, we got to close this bar. Next bar opens, okay, right here, right where we closed this bar. Got 2 more selling imbalances. Boom, boom. It's, you know, so essentially you've got almost a spread out stacked selling imbalance right here, 273, 189, 476. If you were to sort of merge those 2 bars together, you know, again, you know, you're trading a minute-based chart, so that's why it's going to pop, you know, spread out like that. Okay, and then it's a red bar. And look, when you get down here, you got another selling imbalance, 528 against 9. You got a couple buying imbalances, but look at the delta, minus 500. It's quite strong. So, you know, take into account everything that just happened. Okay, you had a rally, a 5-point rally. Get a little aggressive buying up here, but then you hit this high. Where's the follow-through buying? You got aggressive selling coming in as you close in this bar. Next bar opens, aggressive selling is still there, pushes the bar lower. We close lower. Strong negative delta. So you got your swing high, you got aggressive selling coming in, you got stacked selling imbalance that's split up over 2 bars, you got 3 imbalances in this bar, you got strong negative delta. To me, that's, you know, that's like so obvious that, hey, maybe we get a little bit of a sell-off here. You know, you should think about getting short. Where are you going to place your stop? You're just going to place it above this high here at 75. So imagine you're getting short at, you know, 3 3/4 somewhere, or, you know, 3 3/4, 3.5 in this bar right here. And your stop is just right here at 75. So you're risking, what is that, 1.5, more or less. And look at the deltas. It starts selling off, minus 128, 58, still kind of small, minus 100. But the bars, you know, another thing to watch is also the point of controls. Where's the point of controls? Well, here they're all even, but they're gradually getting lower. And boom, we sell off from the 73 3/4, 73.5 area back down to 70. So you're risking, you know, not even 2 full points, you know, 1.5, 3/4, and it just drops off. Boom. Negative deltas all the way down, all the way down, all the way down. Now, I'm not saying you would have shorted at 3.5 and you know, covered down here at you know, at 4, even though here you have a order flows divergence, you have the positive delta and a bullish ratio. You know, that's where you would be covering your trade, down here. I mean, that's where, you know, to me that's just, I don't know, it's just one of those things that just stand out. You know, The other thing is to keep an eye on is the point of controls. What's the point of controls in the bars doing? If you know order flow, one of the basic things is point of controls. Look for the point of controls. On moves lower, your point of controls should be going lower, right? In this case, you got 3 lined up. Okay, fair enough. It's not the end of the world. But then, watch as you start moving down. Lower point of control, lower point of control, lower point of control. That's what happens in markets that are moving down. You have lower point of controls. So this gave you a nice low risk trade. Again, your stop is up here at 5, just above this high. Because if that aggressive buying came back in and we took out that high, there's no reason to be short at all. And then you can capture this whole move. If you're using some sort of moving average where you're getting short, moving average is going to come in here around 72 that you're getting short at. It's just stupid. You're up here right as it happens. Right here, these 2 bars, this tells you there's a potential change in the market. Your reversal is here. And, it just sells off quite nicely. Boom, boom, boom. 3.5, 73 and a quarter. All the way down to 66, 67. Those are the trades that you want to be looking for on a daily basis. Okay, so thanks for watching this video. If you're interested in learning more about order flow, subscribe to my YouTube channel. I've got a webinar coming up on Thursday, April 26th. I put the sign up link in the description below if you're interested to learn more about order flow. Definitely attend it, and even if you can't attend it, it's definitely worth it to sign up, so at least you could be alerted for the replay when it's available. I cover stuff in these webinars that I don't normally cover elsewhere, so it's definitely something to watch. So thanks everyone, and have a great day. Bye bye.